afternoon, good evening, whenever you're listening to this. It is Thursday, April 3rd, and we're going to come on here like Jim Cramer when he cried during the meta stuff. I said yesterday 4 p.m. was going to be bad. We are going to go over everything, okay? The first thing, though, I just got my March stats from Spotify. I couldn't believe it. There were only 7 new ratings on Spotify. If you are listening on Spotify, I want you to go down and rate me 5 stars, okay? Because I've had somewhere in the neighborhood of 1,500 new follows on Spotify in the past week. So Spotify, again, is my largest platform. So go down there and rate me on Spotify. If you're watching on YouTube, hit the thumbs up button. If you are listening on Apple Podcasts, you can go down and leave me a review. It all helps. But most of all, share the podcast, okay? Because if you like this podcast, most likely your friends are too. And the other thing I did yesterday was I got an email from a listener who wanted me to warn people about holding leveraged ETFs. He said, don't buy and hold because you wind up losing. And yes, he bought and held. He listened to an episode of The Compound where Josh Brown explained more precisely than I do why you don't want to buy and hold triple leveraged ETFs. They just don't perform the way you think they do. A triple leveraged ETF is calculated on a daily basis. So between the fees and the price fluctuation, you could actually lose when something goes up. Take a look at this. This is over 6 months. NVIDIA is down 7%. NVDL is down 30%. That is just a double leveraged ETF, but you are down almost 5 times what NVIDIA is down. Again, calculation. Now, an even better example is MicroStrategy or strategy, tomato. Year to date, MicroStrategy is up 7%. Why is MSTX, a double leveraged daily ETF, down 14%? It's based on fees. It's based on the calculation. Just don't buy and hold them. I can say this 100 times, but that mistake will be made by more than one person listening today, and you will lose money. It's a learning experience, and that's the price that you pay getting into these things. Understand what you're buying. It's a shame that I have to say this all the time, and it's a shame that you're going to go out there and buy it. You will. I have too. I've lost money when I've been up on MSTX in particular. I was up, then I was down 30%, and boom, I took it. But it wasn't life-changing money. It wasn't my main focus in the portfolio, and I could afford the loss. I think it was a total of like $300 that I lost. Not a big deal. But know what you own. And the other thing I was working on yesterday, by the way, I'm coming out with merch. So Canva Premium is just the best freaking thing. I mean, if you're creative and you want to do it and you don't know Photoshop and you don't want to, work really that hard, freaking Canva is awesome. So I am coming down with some merchandise. So, and speaking of the newsletter, I've been posting in the newsletter just so everyone's aware. I've been posting, and we'll go over here to the newsletter, because I've been posting at the top of it for the past 3 days. Maybe people don't notice it, but the 1 hour trading strategy. And I've been posting stocks that have gotten entry trades. Okay? Melly, which was up 2% yesterday in the 1 hour trading. Fortinet, which was up 2%. Get the 1 hour strategy when you sign up for TrendSpider through my link tree. Okay? This is a time when you want short term, but you also want protection from your long term, okay? And that's what TrendSpider provides you. When I use my 4 hour algorithm, even though it got me in yesterday, I knew that afternoon candle, I was waiting until 4 o'clock. I didn't want to buy this at 476. We're now down at 454. I knew 4 o'clock kind of did it. So understand, yes, I manage my portfolio like this too. So go and get a TrendSpider. And by the way, you probably don't have any money left because you're losing so much money this morning. Let me just warn you, okay? This is an article That was printed at 1:25 p.m. yesterday. So it was before Liberation Day that we're all supposed to celebrate. Historically, when the S&P has fallen 10%, and yes, we have fallen 10%, and the yield on the 10-year U.S. Treasury has declined by 50 basis points, and yes, that's come true, the U.S. economy has been heading into a recession 70% of the time. Okay, the economically sensitive small cap Russell 2000 IWM is down 17% since last November, and Canada's resource and financially centric TSX is down 6%. As the economy and employment contract from here, and we saw the employment numbers, central banks would continue easing efforts, but inflationary fears around tariffs may slow the pace and degree, at least in the near term. And that was written before the tariff disaster happened. So there were three things that happened yesterday, okay? The first was TikTok has tons of new bidders, including Microsoft, Oracle, Amazon, and AppLovin, which I love. Remember, whoever gets this algorithm can use it on their own models, and boom, you're trained, and then they can be as successful as TikTok Shop has been. But we don't know that the Chinese are even negotiating to sell TikTok. So even though those rumors come out and the ban looms, maybe China says, you know what? We don't want to sell them TikTok. We don't want their users to do TikTok. We're going to screw Trump. And we're going to let that ban go into effect. Maybe they say that. And here's the other thing that we learned. The Tesla delivery sucked balls. But then Elon, there was a headline. Elon said, hey, this is fake news. But there has been rumor, and there have been people in the administration that say he's stepping back from Doge. What did Wall Street do? They ran the damn stock up like 10% yesterday just on that freaking headline. It closed 5% up. You've given it all back today, but we did learn that. And then the final thing that we learned, when they bring out the big board, it's always bad news. And here's a timeline of what happened yesterday. Okay, this time at 425, the S&P futures were trading 1.7% higher because he rambled on and nobody knew exactly what's happening. At 426, Howard Lutnick handed a poster outlining reciprocal tariffs. When the poster comes out, look out. I mean, that's Johnny Cochran's new thing. When the poster comes out, look out. Because stock market's future fell real time. By 442, the S&P had erased $2 trillion in market cap. That's $125 billion per minute. Are we winning yet? Are we winning? Okay, I've got tons of articles here. This is much worse than expected. QQQ was down 4% in after hours, dragged down by the Mag 7. Apple down 7%. It's still down exactly that amount, by the way. This was posted last night, 14 hours ago. We're still there. Okay? These Trump tariffs are nuts. 49% on Cambodia. It's crazy. It is nuts. Okay? 20% on the EU, 24% on Japan, 25% on South Korea. You know where everybody went? Vietnam. That's like 46%. That's where Nike puts their shoes together. It's nuts. Okay, here's the full list of tariffs so you can do it. Tariffs charged to the U.S. It's not tariffs. This is a trade discrepancy. That's what it is. It's not tariffs. This tariffs charged to the U.S. is a trade discrepancy. Understand the calculation. We'll go over that in a little bit. Okay? But I said yesterday, the VIX was going to do. At some point in time, either this is going to be really right and the stock market is going to rip, okay? Or it's going to be really, really wrong. And we hit a recession. We hit stagflations. And the markets are in for a 2008, 2009 style correction, down 40%. I can't imagine robust earnings coming in this quarter. Okay, so you want to be prepared. We're going to get you prepared. Yesterday, UVXY was up. I mean, let's just take a look at UVXY after hours. I had said it yesterday. Play UVXY. Let's look at the after hours move and the 5 minutes. Okay? Once you had confirmation that the tariffs were coming in and you were looking here at 1625 right here, say you bought at the top of this and then you waited until it lost confirmation, okay? That's 12%. Don't say I didn't give anything to you. Don't say I didn't give anything to you. That's 12%. Okay, you knew the tariffs were coming in. You knew how the market was responding. And if you don't understand what confirmation is, go over to the newsletter. Okay, I want you to go to the newsletter on you can go to it on the app. But down here, there's an education center section. You can look up confirmation. And I want you to understand that you could have traded this. This is a 5-minute candle. So that's 2 hours and 15 minutes of your life to make 12%. And we're still going up, by the way. We're still going up on UVXY. The VIX is nuts. Okay? I don't think that he fixes this anytime soon. Biggest stock movers Thursday. Biggest mover, up 4%, Digio. Shares climbed as analysts viewed the U.S. tariff announcement as avoiding the worst case scenario in the spirits industry. Okay, biggest stock losers, Tesla, Wayfair, which imports their stuff, American Eagle, Restoration Hardware, and Apple. The biggest decliner among the Magnificent Seven as Donald Trump's sweeping tariffs measures rattle global markets, because you want to know, last term, he told them to get out of China. They got out of China. They went to India. What are the tariffs in India? Like 90%? It's based on trade disparity. It's not based on tariffs. So India actually imports more from the U.S. Okay, and they start charge a tariff. They do. They charge a tariff, but it's not the tariff that's in this tariff plan. Okay, the good news. There is good news. And by the way, if you just want to listen to this, Reagan in his speech, and I'll put this, Market Sentiment put this in there. It is a great 3-minute speech on tariffs and why he didn't do tariffs and why tariffs are a tax on the American people. The good news is last time these tariffs were enacted under Trump, they were followed by huge government bailouts. If you don't remember, we took in tariffs like $1 billion, a few $1 billion. We gave out the farmers more money because they couldn't make a living when the tariffs to China went on. So bailouts, if you're into, into government, every single liberal should be very happy about the government income that's going to be coming. Because again, it was bailouts last time. I mean, it was bailouts. And I'm not talking COVID. I'm talking farmers and others. The tariff war went so bad, we actually had to support American workers. And again, watch that Reagan thing. So 4 myths about tariffs. I mean, this was written last night at 5:55. Myth 1, we need to reshore jobs to the United States. Reality, the U.S. does not have the available workforce to bring jobs back. Myth 2, the U.S. trade deficit is harmful. Reality, the trade deficit is negligible in relation to the wealth that's been created by the stock market and real estate. Myth 3, tariffs are a tax on foreigners. Reality, tariffs will be mostly paid by U.S. consumers through inflation and U.S. corporations making less profit. Myth number 4, tariffs are necessary because America is broken. Reality, U.S. corporations have over 50% of the world's market cap, despite having only 4.3% of the world's population. We are the richest country. Tariffs would slow the economy by reducing access to labor in foreign markets, losing allies, reducing corporate profits, and risking recession. Again, if you have a long-term time frame, these might be good things, but you could be going into a 70s, early 80s style inflation economy. This is what Reagan was fighting. So it's not the same party. Okay? The good news. Well, let's go into Dan Ives, people that I actually respect. We would characterize the slate of tariffs as worse than the worst case scenario the street was fearing. the tariffs weren't priced in. The biggest focus will be the China 34% tariff and Taiwan 32%, and how this impacts supply chain and demand. Negotiations, the only option at this point for White House. And they've said negotiations are off. These tariffs are in. I don't necessarily believe them, and we'll go into this. Ben Carlson, who I actually respect, I think a recession and a bear market have to be the baseline assumption, and I would agree. Not 100%, obviously, but the probability is high, much higher than it was just 6 to 8 weeks ago. I would say it's higher than it was 12 hours ago, based on this response. Okay, Fed rate cuts, odds for May jump as tariffs fuel. This is what he wanted. He wants rate cuts. And if he gets rate cuts, is he going to back off? Again, I pointed out that for 40 years, he has wanted a trade war like this, a tariff war, because he feels that the U.S. government, the U.S. people are being taken advantage of. I'm not arguing that it should be done. I'm just arguing it shouldn't be done this way. Okay? Because there is confusion. This is governing by chaos. Reporter, China has 34% tariffs. There were already 20% on China. So is that 34% on top of that, meaning a 54% tariff on China? Treasury Secretary Bessent, I believe it is. I believe it is. Well, it's not. It's based on it's governing by chaos. And this tells me Bessent was probably one of the voices in the room who didn't like this. I think Bessent and others in this administration are actually voicing their concerns behind closed doors. But unlike the last administration, if there's even any leak, they are very tight on their actual communication out. And you see it. They all have talking points. They all have talking points. And that probably comes from the Fox News guys that are in this administration, from all of those people who are media savvy. Okay? Bessent advises countries not to retaliate to Trump's tariffs. Do not retaliate. Sit back, take it in. Let's see how it goes, Bessent told Fox News. Because if you retaliate, there will be escalation. If you don't retaliate, this is the high watermark. That means negotiations. Again, I don't know if that's what Trump wanted him to say, but he's kind of leaking it out there that it's negotiation. Okay? Reactions from Canada, Mexico, and Taiwan, not good. Not good. The EU indicates strong plans to counter, not good. Not good. They're negotiating, but Trump has said there's no negotiation. If he sticks to this, we're screwed. You're going into recession. Okay? China firmly opposes new U.S. tariffs, vows retaliation. Again, not good. Not good. And you want to know how it was calculated? There's a ton out there. Just Google how they were calculated. The tariff calculations are based on balance of trade, not pushing for equivalent tax rates. It's like having a problem with the grocery store because you buy more from them than you do from they do from you. Again, if you go to the grocery store and you buy stuff, the grocery store is not buying shit from you. But it's again, that's the problem. The calculation was just crazy. And I'm not arguing that we shouldn't be doing something like this. I'm arguing about the actual implementation. Trump's tariff plan, Shay says it perfectly, messy and poorly executed, but it had real impact. Firms will be cutting their outlooks in real time. In this market, growth stocks don't trade on facts. They trade on trust. And right now there's none. But this is the moment that sets up for the next one. This is it. I mean, that's the thing. This is a moment where you want to make the choices. And I think if you're buying a stock, you better have long-term buy and hold in your mind. Okay, it doesn't mean that you sell stuff out. You can sell stuff out. But realize the way to avoid tariffs is to build plants here. That may take decades. And it's past in this administration's turn. So you can't avoid these tariffs. They can pay it for 4 years. and hope that someone with more common sense comes into the office and wants to get away from recession and accept worldwide trade again. But again, there is no way to create an Apple plant here in the US in the next month. There is no way you can do that. And there is no way that you can take all the Chinese goods and produce them here. There's no way Nike can take their shoes that are created in Vietnam and get the plant up here. So they're going to have to pay it, or they're going to have to do this. And then you get, last night, you get Restoration Hardware warns of economic challenges. This is the canary in the coal mine. Remember I mentioned LVMH, the luxury goods? This is luxury. And they're seeing weakness. That's dangerous. And if you're wondering what the CEO of Restoration Hardware, super, super honest guy. And this is a quote. Like if you're going to bet that the bet on somebody in this race, and I don't know, like I don't have sports or stock now. I mean, I guess, the stock went down, I know, based on some of the numbers we reported, and then it got killed because of, oh, really? Oh, shit. Okay. I just looked at the screen. I hadn't looked at it. It got hit when I think the tariffs came out. Everybody can see in our 10K where we were sourcing from. It's not a secret. He looked at his stock price during the earnings call. And if you think that's fake, here's the audio. I'll put it in the newsletter. You can't hear it, but I'll put it in the newsletter. That's the quote. He literally looked at the stock while he was on the call. And he said, oh shit. The stock right now down 31%. It's trading at 170. Let's look at a weekly chart of Restoration Hardware. It was weak before this earnings. You're down at 170. Let's put a line here. Let's see. It's trading at 169. So we'll just put a line at 170 right there. Do you have support there? No. No. You just don't. And so again, you've got luxury goods. You've got even the wealthy are going to be affected by this. And this will slow down growth. And so go and listen to that audio. It's actually fantastic. And my Apple position, RIP, Trump's new massive tariffs on India, Vietnam, Malaysia, Thailand, and elsewhere wipe out one of the reasons Apple diversified from China. Apple shares are plummeting. Plummeting. It's bad. Let's see where Apple is. Apple right now is using $200 as its support. It's at $205. Okay, it continues to go down. It's 8%. 8%. Is that bad? You bet that's bad. Because if we put a line at $200 right here, do we have support? We have prior resistance right here, couple of times, right at the bottom of this. Now, do you want to buy? Here's the problem I have with buying. Buying right now assumes that there's some change in this. And I don't know that there's a change in this. So Apple, you're in a bull market until you're not. And Apple right now falls after Trump's tariff kick in. Bank of America expects company to manage supply chain and to minimize the impact. It might be a buy. It might be, but it's still expensive. And even though this has reset, do I expect this to get back to 260 at some point? But not with a 24% tariff on every freaking iPhone that comes into America from China. Okay? So now is the time. Now is the time that you want to set up some of these alerts because tech stocks are down. Here's the Robinhood down 10%, Apple Oven down 9%, Palantir down 8%. Tesla, which is a 100% American car, is down 6% because Americans will have less to spend. Amazon is down 6%. Again, you are getting Amazon. You're paying for AWS. You're getting the rest of the company for free. Nvidia is down 5%. They are not immune. Broadcom is down 5%. Meta is down 5%. Alphabet is down 4%. And the reason Meta and Alphabet are down is because if the consumer consumes less, then people will pull back their advertising. Okay, so what do you want in something like this? Downtrends are everywhere. Why chase? Let the trend shift. Import this into your setup. Okay, this is any bullish moving average crossover. And we'll subscribe to this. And we can put this, let's see, any trading strategy. Okay, it's in a strategy. So let's go look at this. Moving average crossover. There we go. Any bullish moving average crossover. There we go. And let's look at this one. Oh, is this the one that I wanted? Let's see. We're going to go back. Any bullish MAC. Let's see. Entry conditions, any of the following, Sierra, exponential, blah, blah, blah. 60 minutes. So it is an hour. It's interesting. And let's go look at SPY on this one, because we're going to look at SPY on this and make sure this is the one that I wanted. I have so many, 5.7 years. Okay, 5.7 years, 10,000 candles on a 1 hour time frame. This is crazy. It's a 1 hour time frame. Okay, you win 41% of the time. And this is on SPY. You have 138 positions over 5.7 years. Okay, so figure out how many months that is, how many positions. Figure out if you can trade it. Your average win 3.45%. Now it doesn't have you. It has you in at 573. It's going to get you out today. It's going to get you out with quite a loss. But again, focus on this down here, the performance chart just down to the left of my head. The performance chart, 124% versus 89% if you bought and held. 89% is great. But if you can trade on a 1 hour, and you can see how fluctuating it is. Again, you have 138 positions. But look at how it keeps you out from the huge downturn. And it saves you. Here, a 2% gain. And you could have just held on to this one at 600 and said, you know what, at 606, when it crossed the 200 day, again, having a plan. Make sure you understand the strategy when you do it. And this strategy, it gives you the entry and exits right there. So it's SPY on a 1 hour time frame. I'm telling you, you don't want these tools just during the bull markets. You want them during the bear markets. That's why I did the 4 hour algorithm. That's why the 4 hour algorithm was created, because my friend and I, Steve, we were looking at the markets during COVID, and we said, hey, during COVID, I don't want this huge drop. And if we go and look at a monthly, let's look at a weekly. We'll go back to COVID, because COVID is right here. We said, during this time, we were sitting here. We didn't have TrendSpider. We said, that 35% over 1 month, I don't want to live through that again. How can we avoid it? Well, we can avoid it by creating an algorithm that tells us when the F to get out, and that beats buy and hold. Now, for many, many times, this one beat buy and hold. Right now, you're down 36%. The reason it got you in yesterday, would I have gotten in yesterday? No. But it's, you win 65% of the time on the 4 hour algorithm. Get the 4 hour algorithm by signing up for TrendSpider. Okay. You get 40% off. You get the premium version. Okay. The premium version for, let's see, it's $712 a month, 40% off. The premium is the best deal going, because if you go to standard, which is just the base, that is $708 a month. Go up to the premium, which is the middle, and $712 a month. So again, with the premium, you get 2 trainings per year. So you get one, you get one at the beginning, and then go for about 3 months, trade on it, and then get the second one. It's the best tool out there. Okay. And before I was reading, this was printed yesterday before the whole thing. This is a great one from Flyer Wealth. 5 stocks I'm buying to hedge tariff announcements. Berkshire, absolutely brilliant. Berkshire is a great one. How's Berkshire holding up? You're getting it on sale. It's down 2%. Okay. Cake. I don't necessarily agree with this one. I'd rather you go into EAT, which is Brinker. Visa, I went over Visa yesterday. The one that caught my eye is BTCI. Okay, BTCI is a Bitcoin income ETF. Now, what's interesting about this one is it just started, but its yield, annual yield, is 16%. You want to know why it's up? It's up in pre-market 3%. The reason is this one trades on volatility. And if we go and look at Bitcoin, BTC versus USD, you're down 1%. So again, he makes the point. Last month, the ETF paid me 2.65% on a month. That's a 31% annualized dividend. And the shares were up 3.45%. Not a shabby return considering the market itself was down 3.65. This one seems like a winner. Again, you're taking risk. And Amazon, I think you're getting Amazon at a deal. So I'll put the link to this one in the newsletter. So remember how Nike, everyone said Nike was cheap? This is just a warning. When somebody tells you that something in this market is cheap, be cautious. 25 times earnings, even though it may be historically cheap for something like Nvidia, is not cheap in a bear market. Even quality stocks fall to 15 times PE or lower valuations when this compresses. Be careful. Okay, you want to know what you're buying. Doesn't mean that you don't buy during these times, because any reaction in the market is an overreaction. But if I go back and look at Berkshire, and we go back and we look at a weekly, and we look at 2018, 2008 during the housing crisis. Let's look at a monthly. We're going to go to a monthly so I can drag that in. 2008 during the housing crisis, you can see Berkshire was not immune. So even if you buy something that you think is immune, it's not immune. It just may mean that you lose less than the market. What you want to do is have some cash. Raise some cash. During a bear market, you want to raise cash. Now, it's not a bear market yet. Okay, we're down. So let's go over some defensive plays. Before we go over this, I want to address something. This is the not cheap today in a market where you don't have it. Just be aware. I'm looking at my notes. This means you scale. Yeah. So when you get into a position, by the way, before we go into what maybe to buy, remember, before you scale into a position, say you've got $5,000 that you want to put into something. Okay. In a bear market, you don't just go out and buy $5,000 of a stock, even if you think it's going to spike. You put money in gradually. And the reason is because even though in a bear market, what you will see is exactly what we've seen over the past month. You're going to see some false spikes. And if the market does recover, say, Trump starts negotiating and the tariffs start to come off and Wall Street all of a sudden says, hey, the tariffs are coming off and we're getting lower interest rates. Maybe we want to come back. It doesn't prohibit you from buying higher. Make a plan. Have a plan. It requires a plan. Pharmaceuticals are excluded. Before we go into pharmaceuticals, I want to just give you the ultimate one that I think is going to be probably the big winner through all of this is XLU. It's down 0.16 in pre-market. But this yields 2.87%. Okay? Any utility going by NextEra, okay, going by Southern, going by Duke. These are energy companies. Go and research XLU. Because I think even if you bought this one with a 2.87% dividend yield, I think you're okay. You can go and FXU is the number one right here, 2.29%. Year to date, you're up 9% while the rest of the market is down, while SPY is down. Go and find an ETF that works for you in utilities. Go and find a stock that works for you in utilities. People will still pay their power bill. Companies will still pay their power bill. Pharmaceuticals may be a way to go. In his comments, Trump noted that several large drug makers, Johnson & Johnson, Eli Lilly, and Merck, have recently made announcements of making manufacturer investments in the U.S. That's what he's looking for. So even though the pharmaceuticals are made overseas, he's not dumb. He knows they can't get a plant done in the next month. So making a judgment, and maybe he excludes your products from the tariffs. Now, one I would say is Eli Lilly. Weight loss therapy added to Hims. I think both of these. Understand, Eli Lilly, you're paying for the leadership. Okay, Eli Lilly is down 1.33%. It's at 807. You're gonna pay for leadership. And this is the largest pharma product company out there. You're gonna pay for leadership. Everything else is good. Can they grow? Absolutely. But here's the thing. And I want to point this out because this is important. Hims, it's highly volatile. It's down 10% in pre-market to $28. So understand, you need to get a good price for this stock. But with Eli Lilly charging $500 a month for triceptide on its direct platform, we find it unlikely that a consumer could go to a GLP-1 brand. Okay, this is generic at $18.99 a month. So Alan Luntz argued, noting that Hims listed the product for $18.99 while Lilly is selling it for $500 on their direct. And here's the thing about compounded pharmacies. Let's see. I want to find this particular quote. Through our platform, we've been weaving, I guess they took it out. Has no connection. I put it in. Oh, here it is. However, Eli Lilly noted that the company has no connection with Hims. Lilly has no thing. I guess they took this out. They may have taken this out of the story, but I screenshot. If the company can achieve commercial success, there it is. Yeah. Yeah, it is. It's there. If the company can conceive commercial success, a drug with lower with liraglutide, which is a drug with lower efficacy and more concerning side effects profile compared to the newer GLP-1s, it would represent a significant milestone and validate the strength of Hims brand. If they're going to just go and pay $18.99 for a generic where Lilly's charging $500, I don't think people are actually consumer shopping. I think they're going to Hims, getting the prescription, and they're going to pay higher for it. Okay, but they're going to get a generic with higher, a drug with lower efficacy and more concerning side effects. That was the line that stuck out to me. So I went to Perplexity last night and I said, hey, with the new Trump tariffs in place on imports and the stock market crashing, what are some good defensives? Okay, here's your list. Consumer staples, Keurig Dr. Pepper, Safe Haven, stock with minimal tariff and consistent demand for beverages. Walmart's down, benefits from steady domestic retail operations. It's down. Okay, they're not going to be able to lose that. So this is one that maybe you want to do for long term, because they'll find new supply channels. Utilities, American Electric Power, utilities companies with stable cash flows and low international exposure. Healthcare, Cigna and Johnson & Johnson, defense sector, General Dynamics, financials, CME Group. So you've got ideas. You've got to research which ones you want. Okay? I'll give you some other ones. I'll give you Amazon. Amazon, for me, you're paying for AWH, which is not tariffed. The stock is down mostly because of the retail business, because costs will go up. But if AWF Cloud continues to grow, their Prime membership continues to even stay the same, and their ad business continues to grow, AWF growth is 17%. It's accelerating. The ads business is up 24%, booming. I think consumers with Amazon will stay strong. Google, this isn't tariffed. Okay, you'll have to worry about Europe coming after Google. You will have to worry about the other Perplexity and other AI wrappers coming after Google search business. You'll have to worry about that. And in turmoil, here is an article from Steve Kress. These are stocks seeking alpha's Quant. Okay, the Quant system is designed to help investors identify stocks with strong fundamentals that have historically led market recoveries. Looking at historical data, the market has pulled back 5 times by 15%, more than 15%. And after 2 years, investors who purchased the top Quant strong buy stocks realized average gains of 117% versus the S&P 500's 50%. Okay, that's facts. So you want to plan. One of your plans may be going over here, and you can sign up for the bundle here, which is you save $159. You can get Alpha Picks, which is a curated portfolio, which we just got one on the 1st, and you get the Quant. So when you see me go over here and look at these ratings over here and say, hey, this is expensive, it's because I know the valuation, growth, profitability, momentum, and revisions right there. That's the Quant. And you can easily just go, even if you don't know anything, you can go with Analyze AI. So these are the top 10 Quant stocks for April. He printed this yesterday at 5 a.m. You're getting these on sale. Okay, the first one is AAPL. This one's down 10%. We talked about the TikTok stuff. Let's go to the 4-hour. Okay, it has you out. Wait until it gets you back in, and then buy it. Okay, it's down at 263. Do we have support at 263? Let's look at 263 down here. Did the market open? The market opened up, so that candle's an actual candle. Do we have support? Yeah, we do. We still have a gap up here to 373. Is the valuation appropriate? Let's look at AAPL. It's a D. So maybe it's a little expensive, but everything else is good. And this isn't affected by tariffs. Another one that's in the article is Brinker. This one's got a C in valuation. It's not expensive, and everything else is good. Okay? Know what you're buying. And you can go and use Perplexity. Go and research those two, AAPL and EAT. If you don't have Seeking Alpha and you can't read this article, go and read about AAPL and go and ask Perplexity, why should I buy it? Why should I sell it? Okay? Crypto's not immune either. Bitcoin spikes, then retreats after we talked about that income one. It's back to even. Lulu and Lulu. All of the retail stocks, because they're expecting the consumer to be weak, we may very well be going into a recession. This is down 10%. Stocks have started to become a buy, but you don't want to buy until there's some certainty. Okay, we're seeing some green candles. Here today, we opened up at 456. Where are we trading? 458. It's not huge, but at least we're seeing some movement up. Okay, just because there's going to be this gap. Okay, this gap from 460, and we've already gone red. But that 460 up there, this 5-minute candle, you're going to see a gap today, and gaps get filled, and there's going to be hope. Okay, have a plan. Shay's plan, active dollar cost average plan. Amazon, A-Lab, Net, Axon, Rubrik, and Melly. Active watch list. He may be adding to those. Have a plan. This is what the entire podcast is about, having a plan. Having the tools at your disposal to make a plan and manage your portfolio. It's going to be a shit show. Hopefully I gave you some ideas. Hopefully I gave you some things to think about. Go sign up for the newsletter. Let us help you grow. I'm not that worried about it. I have been dollar cost averaging into some of these ETFs. I am at a loss. I would consider the next probably few weeks very volatile. I would consider the next earnings seasons to be an absolute disaster with guidance. Nobody's going to give you good guidance under the current state. Restoration Hardware was just one that called out the tariffs. Oh, because they saw, and then he goes, oh shit. That's going to be the reaction of a lot of CEOs this morning. Oh, shit. So just understand there are opportunities. It's probably short term. Take any profits that you can on trades that you get and set yourself up for 5 years from now. Because 5 years from now, I think things get a little calmer. I think things start to get back. You know, you're in a bull market until you're not. That's the title of this episode. And have we turned over? Yes. You look at a weekly, we've turned over. We haven't had confirmation on a weekly since February 17th. You're not in a bull market anymore. You're just not. Now, does it mean that we're in 2021 to 2022? No, not yet. But you very well may be in this first part. Okay? The first part went until March 14th. From December 6th. It was December to March. What's that? December, January, February, March. 4 months. What are we? February and March. You will see further downside. Okay? As confusion lingers. It's managing by chaos. And so you're going to have to deal with it. But it doesn't mean sell everything and get out. That my strategy is not sell everything and get out. It's typically buy and hold. And I'll sit there and I will endure the pain, but I will also rebalance my portfolio and make sure I'm adding to my winners. And you don't want to add big positions to your winners because they could wind up losers. So, you know, Pepsi's up 2%. Coke is up 2%. Anything that's local and is just a mainstay, it's not bad. So if you have any questions, hit me up. Linktree has everything that you need, or just respond to the newsletter, reply. Everything's up there. Again, these tools, have a charting tool so that you're comfortable with the charts. And like I said last night to somebody who wrote to me, how do I learn technical trading? Go to Investopedia and Investopedia.com. Go to YouTube. I learned on freaking YouTube. You can learn in a weekend. What you can't learn is the comfortable nature of just looking at a chart and understanding what it is. That's what takes time. But the actual process of learning the MACD, the RSI, Bollinger Bands, and moving averages, you can learn about that in a weekend. And then pick out your favorite stock and manage that stock chart. Understand the last time that Apple came down here, the last time that Apple on a weekly was down below the 50-day, was back here in April of last year. And then you had Apple Intelligence. I understand that the last time that it was down here below its 50-day before that was during the 2022 crash, when we were raising interest rates and people just weren't feeling very comfortable. Understand, when it was below its 50-day during COVID. So it's now below its 50-day on this average. Is this something that you want to add to? You have to ask yourself, what's the time frame? Because if we continue down to the 200-day, that's 177. And I have no doubt in my mind that is a good buy for the next 5 years. But I don't know when you're going to get positive, because I don't know the answer to this tariff question. So you're just going to have to make your own decisions. And some of these decisions will be hard. You will make mistakes. You're not going to optimize your portfolio. You're not going to get in and out at the exact time. When you lose sleep, that's when you change direction. That's when you change your plan. That's when you alter some things. And you have to identify what you're losing sleep over. If you're losing sleep because you're losing money in the market, you are not fit to your risk tolerance. It's a muscle. Build it. Okay, I'll talk to you tomorrow. See you later.
Every morning I wake up to the sound of the trading bell.